again, this is meant to be informal. It's meant to be educational. And I'm hoping that you will take away something that will help you in your day-to-day life. So what I'm going to do first is I'm going to share my screen. And hopefully you guys will be able to see my presentation. Okay, great. So I can't see you anymore, but I am sharing the presentation. So Loren, you're good, you see it?
Yes, it's perfect.
Okay, excellent, great. So we're going to do 3 of these. The first one is today, covering goals and budgeting. Part 2 is to cover savings and investments. And then part 3 will be credit and loans. So we're going to do them every Wednesday for the next 3 weeks. So please sign up if you're interested in those topics. And if you have any questions lingering from today's conversation, you could also bring them up either at the end of the presentation today or next week. And I will leave time for questions, like I said. Okay, so so everybody has to deal with money, right? It's not something where some of us deal with it and some of us don't. It's what makes the world go round. And so we can only help ourselves by having an understanding of financial literacy and financial terms, and what can we do to make the best choices in our life and manage the financial resources we have in such a way that we can be in a comfortable position further on in our life, or meet the goals that we have. If we have certain goals to invest or to purchase items, what can we do? And financial literacy is how we get educated. So in terms of money, it's a scary topic, right? A lot of people don't like to talk about it. A lot of people like to avoid it. And I take the opposite approach. I say, let's get it all on the table. And let's talk about what works, what doesn't work. If we're in a scary financial position, that's okay. We can't go back in time, right? All we can do is start where we are today and adjust our behavior going forward, right? And knowledge is power. So that's the goal, is to have the knowledge, to be honest with ourselves. And then we're going to have questions. You're all going to have questions coming out of this. Everybody's starting at a different point of knowledge, right? Some people know a lot more than others, and that's okay. So the point is to be aware, to have the discussions, and then think about your specific financial plan and situation, and who can you enlist in terms of experts to help you and hold you accountable to hit your goals going forward. Perfection is not the goal. The goal is for continuous knowledge and improvement. So it really all starts with goals. And this is no different than our day-to-day life, right? In our careers, we set goals. Well, with money, we have to set goals in order to be successful. And some quotes that I like begin with the end in mind, right? So like, what does good look like? And what do we have to do to achieve our goals so that we can then work backwards? Setting goals helps bring your future into your present, and the present is the only time we can take action. So again, it may seem like a lot of years away if it's retirement or planning for college, or you may have something in the short term, but today and going forward, we can take action. So if we know what we want in the future, we can work backwards. And setting goals is the first step in turning the invisible into the visible. So if we don't set the goals and we don't talk about it, it's not going to happen. That's the one thing we know, is if we don't put it down and we don't make it something that we're going to focus on and be intentional about, we're not going to achieve our goals, unfortunately. Goals are different for everyone. They vary at different phases in your life, and they're going to evolve and change. But if we have one place where we're always, whether it's, a notepad or a file on your computer or note on your phone, put down your goals and continuously look at them. They're going to change, and see what needs to be tweaked, adjusted, reprioritized as your life evolves. And that's totally expected. So some of you may have heard of this term SMART goals. SMART is an acronym. It stands for specific, measurable, actionable, realistic, and time bound. And all of the organizations that I worked at, basically, we had to come up with our SMART goals every year, right? What are we going to achieve for the year? And it couldn't be vague and general, like, I'm going to create the budget for the company. It had to be very specific, measurable, actionable, realistic, and timed. And that helps us be successful, because if we're so specific and measure it, then we can come back later and say, did we achieve it? And we can have the small steps that are required leading up to achieving those SMART goals. So this is referred to a lot in terms of career goals, but it's also relevant for money. And it's pretty self-explanatory, but we'll walk through it, each one anyway. Specific is be clear and specific so your goals are easier to achieve. If it's very general, like I want to have retirement savings, that's not really enough to be able to come back and say, am I on track to hit that goal? Did I hit that goal? So specific, how much do you need for retirement? When do you need it by, right? Measurable goals can be tracked, allowing you to see progress, and they can also help you see when it's complete. So measurable would be, okay, if I set that retirement goal for X amount of dollars that I need to have by X year, how do I back that up? And what are the points in time where I need to measure where I am to see if I'm on track? Actionable is, can I take the action to achieve the goal? What are the actions I have to take? So if I set that goal, but then I never do anything else and I just leave it on that note on my phone, I'm probably not going to achieve it. What are the actions I need to take leading up to that? And that if I lay out those specific steps beneath my goal, that will help me achieve it. Realistic. We don't want to feel like we failed, right? And so if we set a goal that we want to have, $20 million by retirement, we're probably going to fail. So what is more realistic? What is something that's really achievable? And little wins are important, and we're going to feel better and more confident if we get those little wins. So realistic is very important. It helps avoid frustration. And time bound. Again, if we give those times, the dates, the years, and can measure our progress along the way, we will know if we're being successful. And it's not this vague, ambiguous goal that's just out there, but it's something that we can track against, right? Just like a weight loss goal, right? If you want to lose 20 pounds by the summer, you're going to make sure that you're losing, X amount of pounds per month, right? So it's a lot of common sense. Some of it seems very obvious, but it's important to remind ourselves what makes good goals and how can we be successful. So that's what the SMART framework is. Now, goals can be short-term, let's say less than 6 months. They can be, intermediate goals, like by the next year, or they could be long-term goals, longer than a year or 5 years or 10 or even 20 years. And it's important to think about goals in this way because we want to make sure that we're thinking about how they overlap with each other. If I have a goal within the next year to go on a Caribbean vacation, that might also impact my retirement if I'm deciding to use that money against my intermediate goals. So we want to always be thinking about short-term, intermediate, and long-term. And we want, again, like I said before, we want to always reevaluate what our priorities are, right? If we have a child who's going to be going to college in 10 years, that might be, a big priority right now. If your kids are out of college and you don't have to think about that, then your goals have changed, right? And so thinking about it in those timeframes helps us stay on track and make sure that we're thinking of the full picture and all the elements of our lives, not just one or the other. So let's take a look at specific examples, right? So within that SMART framework of specific, measurable, actionable, realistic, and time-bound, an example of a short-term goal might be, I want to buy a new purse by the summer. It's $250. And so that's a very identifiable short-term goal. And I know how much I need. So it hits on the specific, it's measurable. We're going to talk about how it's actionable. I think it's realistic. And of course, it's time bound. So in terms of the actions, maybe what I'm going to do is I'm going to set aside $50 of my pay for each of the next 5 months, right? And that could be my specific plan to achieve that short-term goal, right? I'm going to put it in a jar. I'm going to put it in a savings account, whatever it is. I'm going to take it out of my pay off the top, and I'm going to set it aside so I can't spend it on dinners out or, something else. An intermediate goal could be, I want to pay off a chunk of my credit card debt by the end of the year. And so let me think about how much I want to pay off. And let me think about what's realistic. What can I put aside each month? If I can put aside around a little over $200, each month I can pay off that credit card debt by the end of the year. So again, it's specific, it's measurable, actionable, realistic, and time bound. And then a longer term goal, again, could be that retirement. I want to have 250,000 of retirement savings, let's say by 2040. How am I going to do that? How much do I need to set aside each pay period? What am I going to assume in terms of market returns on my investment? Am I going to be invested aggressively or not? And a financial planner can help you with that. All of the big banks will help you with calculators and how to do that. I'm going to get into it actually in next week's talk. We're going to go into that in a little bit more detail. But, let's make sure that I'm contributing to my 401k at my company, or I'm setting aside my own money. If my company is matching my 401k, I certainly want to make sure I'm maximizing that company match, because that's free money. So these are specific financial examples, and you may have career related examples. Like if you want to shift careers and get into a new area and you need to take some training, put a goal together about when do you need to do that training? What is it, who, what, when, where, why, so that you can meet all of these qualifications for the SMART goals. And if you want to get a new job by a certain date, well, work backwards. When do you need to have your resume done? When do you need to have interviews? So with any goals, if we lay it out and then we talk about what it's going to take to achieve it, we have much more of a chance of being successful. The other thing is accountability. So we all know that if we set a goal at the beginning of the year that we want to lose 20 pounds of our holiday, weight gain, if we tell our friends and we go to the gym with our friends, we're more likely to achieve the goal, right? If we don't tell anybody, then we can kind of hide and, just kind of next thing we know, we're back, drinking and eating, and we're not losing, but we're gaining weight, right? And so financial goals are the same thing: setting them, writing them down, and then holding ourselves accountable, talking to friends and family that we trust, visiting where we are. Why is it working? Why is it not? What do we need to change? Whose help do we need? Where do we need to raise our hand? But making it something that we track and are accountable for, there is a greater chance we will hit our goals. And in terms of writing them down, again, any format can work. Put it on your phone, put it in a notebook, put it on your computer. It doesn't matter. What matters is that it's something you're going to look at, and that you're not going to 2 weeks in let your foot off the gas and just kind of blow it off. Right? Hold yourself accountable. And if you have friends that are setting them also, you can meet once a month and talk about them with each other, and you can all help each other so that you're not alone. Okay, so now we're going to shift to talking about budgeting. So when I worked at the 3 organizations that I've worked at in my career, I was responsible for budgeting for the company and all of those. And budgeting for the company is not all that different than budgeting for yourself, right? We take a step back, we look at the business, we understand what is the business bringing in terms of revenue. What are the different streams of revenue and how much can we expect for the next year? And then we talk about what is the business spending money on? What are our expenses? What are the fixed expenses, the variable expenses? And we plan out that budget working closely with the different departments in the business. We set a budget, it's fixed in stone until it's not, right? And then as soon as the year starts, we have to always update that budget. That's called a forecast, because it's like, oh, what changed? Well, we had to shut down one of our stores. So that revenue we thought that's going to come in is going to be different. Or we had to pay people more. So that our cost for our paying our employees is more. So our budget is now going to be off. So the point is that whether it's for a company or whether it's for your personal life, you have to budget. It's literally the roadmap. And if you don't do it, you're not going to know what good looks like. You're not going to know how you're tracking. So we build the budget and then we update it. And that's a forecast. And we do that in our life as well. So the budget is telling your money where to go instead of wondering where it went. And budgeting is the first step toward financial freedom. If we don't do it at all, then we're just flying blind, right? We don't know where our money's going. We don't know if we did well or if we did poor. And so budgeting is really the key of everything. And if we want to execute against the plan, we need a budget. So budgeting, again, is creating a plan to manage your money. You have to look at your incoming money or your income, and you have to look at your outgoing money or your expenses and make sure that they're in balance. And we're going to look at that in a little bit more detail. A budget enables you to manage your full financial situation and have greater control. So again, if you don't have this and you don't even know what you're spending money on to build a budget, you're not going to be able to achieve your goals. So budgets are something that can be done at any level of detail. You could do it for, all the things you spend money on, right? Like the cable bill, the cell phone bill, the rent, the car insurance, the car payment, clothing, health expenses, right? It could be very detailed so that you have all the information there, and you'll see an example of what that looks like. So you can look at it monthly, you could look at it annually, and some months are going to be different than others, and some years are going to be different than others. Again, the goal is not perfection. It's not going to be to the penny, but we're going to know directionally what we think we have incoming and what we think we have outgoing. And if we understand that and we set it up for the year, then we can see how we've done and monitor it and update it as the year goes on. So a simple budget formula, and again, I'm a finance person, right? So I'm not trying to overwhelm you guys with a lot of financial terms, but I'm going to go through this slowly, and I want to make sure it's clear. And again, it's common sense, but it's not something we maybe always all think about, right? So the way to figure out our budget is to look at our total earnings less our total expenses, and we're left with either a surplus or a deficit or a profit or loss, just like a company, right? If a company is spending more money than they're bringing in, they're going to be operating at a loss in the red. If a company has excess money after they pay out all their employees and all their costs, then they're going to have a profit. So it's the same thing for us and our home lives, right? What money do we have coming in? That would be salary. And that's net pay. It's, if your employer tells you your annual salary is $50,000, that's not your earnings, because you're going to pay out taxes, you're going to have deductions. And so what matters is your net pay. How much cash is actually going into your bank account at the end of the day? That's what you have to work with. That's what you have access to, right? Investment earnings, if you do have money invested and are selling there and have real earnings that you can count on. And gifts would be another example of earnings. So those are all green, that's money coming in. And then we have our expenses. Fixed are expenses that we know are pretty much going to be consistent each month. Your mortgage, your car payment. We're going to look at these in more detail in the next slides. Variable expenses may be, electricity, right? We're going to pay more in the summer because we need air conditioning. And then periodic expenses are bigger expenses generally, and we can't always plan for them, right? So if you need surgery, that's something that, doesn't happen every month, every year, and it may be expensive. And those things are hard to plan for sometimes because we get surprised, right? Which is where an emergency fund comes in. So if we understand our total earnings, and then we understand how much money is going out or total expenses, we will know what we expect to have left or what our deficit is. And if we're operating in a deficit, that means we're probably using credit cards, right? We've taken out loans. We want to understand what's driving us to need to do that. So I'm going to pause here just to see if there are any questions, because we covered a lot so far, and I can keep going and we can save questions to the end. But does anybody want to ask a question at this point? Good. I can't see you guys, so I'm going to assume, since I didn't hear anybody, that we're good. Okay.
Loren,
Yeah.
hi, this is Ellen. Hi. I'm
Hi.
sorry, I'm not able to put my camera on. I wanted to know, do you have any recommendations for any tools that are free that you can use to help track a budget?
That's such a great question, Ellen. Thank you for asking. You're going to see in a couple of slides that I pulled down an Excel spreadsheet from the internet. There are a lot. And so if you Google it, you will find a lot. There are websites. There's a website called Mint that has some tools. There are a ton of Excel templates. I have to be honest, for my family, I built my own spreadsheet. I kind of looked at what was online and then I built my own spreadsheet because I adjusted it for specifically what worked for me. And it allowed me to get comfortable with the spreadsheet. But that's a great question. And I will show you the template that I put in here in a couple slides. But if you Google it, you will see there are plenty. Try that site Mint as well. That's one that I know people use. And it can get overwhelming. And so the point is that there are a lot of tools. It doesn't need to be fancy because it's really just about getting it broken down to the most basic level so that you understand what's coming in and what's going out. But awesome question. I'll show you the one I pulled.
Okay,
Thanks for the question. Sure. Okay, so let's talk about these types of expenses again. If you remember here, we had fixed, variable, and periodic expenses. And that sounds like a lot of financial jargon, but I want you guys to really understand the difference between those as we start to examine what we're spending money on. So again, fixed expenses occur pretty much every month. And we've got things like rent or mortgage, a car payment, cable, subscriptions, and I put savings on there. And some people would be like, why'd you put savings in there? That's in the wrong place. The reason I put that there is because if we budget for savings, then we're paying ourselves first, right? So some people don't do that. And then there's nothing left for savings. The point is, if we plan for that, and we say we want to set aside a certain amount of our income to go towards our savings and to pay ourselves, then it'll be in our plan. It'll be in our budget, right? And so that's why savings is there. And you could do that again through a 401k, through a company, or through setting aside just a part of your paycheck. Variable expenses tend to fluctuate month to month, but there's still things we need to plan for. Utilities like electricity, entertainment, right? So movies, shows, trips, dining out, and you'll see this bucket of expenses, this category is where you can really impact your financial situation, because a lot of these are wants, not needs, right? So dining out is nice to do, but do I need to do it 4 times a week, or can I do it once a week, right? Clothing is another thing. Do I need the most expensive store to buy my clothing, or can I look for sales, and can I buy something more affordable? So these variable expenses are very real. The list of them is very long. It's usually we are surprised when we examine it and we see how much money is really going here. But it's also the place where we can go to adjust our situation. And same thing in companies that I've worked with, right? It's, there's a lot of detail there and a lot of line items, but if we cut everything by 10%, all of a sudden we've saved $1 million, right? And so same thing with our personal variable expenses. Those periodic expenses are the ones that are tricky because you can't always plan for them. They're often surprises, and they're often very large. And unfortunately, these are the ones that end up sometimes pushing people into bankruptcy, or finding themselves caught without enough money to cover them. And the best I can say here is, you've heard people will say you should always have an emergency fund. You should always have 6 months emergency fund. But these are things that if you want to space them out, right? Like house repairs, if you need a new roof and a new furnace, can you plan for that so that you're not doing it all at the same time? Even though you are going to have those emergencies that just have to be addressed now. Like my washing machine broke last week. I don't have a washing machine right now. I have to replace that. And medical bills are tricky. Again, something that's hard to avoid. Sometimes they're negotiable. Sometimes you can push them off in terms of when you pay them with cash. So there are things you can do there to try to impact that, but they are also tending to be larger and can catch us by surprise. Tuition is something that for college, for your, or, graduate school for yourself or for children, or dependents, you can plan for that. You can have a 529. You can have them take out loans. You can have them do work study. There's things that you can do there, but again, that could be a very high amount. And vacations, right? We don't all go on vacation all through the year. We may take 1 or 2 vacations. Can we plan for that? Maybe we can't do 2 this year, but we can do 1 this year and 1 next year, based on the way our budget is shaping up. So, everybody's got these. Everybody, whether you make $2 million a year or 50,000 a year or somewhere in between, everybody's got these buckets, right? And it's important to think about what we're spending money on and how is it falling into these categories. And again, what's interesting is, we think that we have to make 2 million to be able to be comfortable and save and have retirement. That's not really true. One of the things we teach the high school students a lot, because a lot of the underprivileged students that we teach, believe it or not, a lot of them think you have to be like a professional athlete to be wealthy, right? And the point is here, you can have professional athletes and lottery winners that are broke, and then you can have somebody making a very modest, 50,000 a year salary that, manages their spending and has disciplined savings where they are able to retire, and be comfortable. So, you don't have to be super rich to be in a good financial situation. It's about understanding how much you have coming in, understanding how much you have going out, and what do you need to tweak so that you can live comfortably within your means. Now, all this data is available to us. We don't always look at it, right? So back to the question about, what source can we use in terms of tracking? It's similar with the spending, right? We have our banking detail online now. We have our credit card detail online, and it can sometimes be really overwhelming to get all that data and look at it. And it takes time, right? I have not come up with a way I could just push a button and have my whole budget populated. And maybe it does exist. I'm not the most advanced with technology, but I have not been able to find a way to do that. Sometimes the credit cards and the banking sites will show you, like a pie chart, and they'll show you how much you're spending on, merchandise versus food, but I find those not as helpful, because you really just have to dig into it and understand what you're spending money on. If you look at that stuff closely, it's also a way to find out if you've been mischarged for things. Like, we have a parking garage, and we found out that they charged us twice in December. And if I wasn't looking at the expenses, I wouldn't see that. And they would have had that money from me because it was going automatically to my credit card. So the other benefit of analyzing what you're spending money on, besides just the learnings and the insights that you get, it really opens your eyes to what you're spending money on, is that you can make sure you're not mischarged. And if you were owed a credit, that you really got a credit and it showed up on the statement, so you don't have to be a CPA, you don't have to be an accountant to do that, but it does take time. It is worth it. Right? We spend time on our jobs, we have to spend time on our own financial health. So this is a good way to think about expenses. If we dig more into that needs versus wants, right? Like I said, those variable expenses, those wants, is where I can really make an impact. So I have to have food for the refrigerator. I have to have a house, or, an apartment to have a roof over my head. I have to have clothing. But do I have to have dining out 4 days a week, 5 days a week? Do I have to have, the fanciest house? Do I have to have the fanciest clothing? And this is tricky, right? Because we learn our spending habits when we're younger. If we lived in a household where our parents were always charging everything on the credit card, we may think, it's limitless. Oh, I'm just going to charge it on the credit card. It's fine. I can buy this $500 bag because I'm just going to charge it. And what's scary about that, and I've seen it happen to friends of mine who always spent above their means. And I was at my friend's house when her father's car got, repossessed and taken away. And so the point is that if we're charging things on the credit card and not paying them off on a regular basis, that means we need to reassess how we're spending, because we're spending above our ability. And it just means we're going to be in the red. right? So we all love to dine out. Life is short, right? We want to dine out, but can we compromise? Can we schedule that vacation next year and instead of this year and save up? Not that many of us are going on vacation these days, but the streaming services I put here as a want because they're overwhelming. I mean, every day, if you wanted to, you could be subscribing to 12 different services and it adds up. They're raising prices, Amazon, Hulu, HBO Max, Netflix. They're raising prices. They add up. If you have cable also, next thing you know, you're paying all this money. Look at it. How much are you paying? If you've got cable and all these streaming services and you add it up, you're going to be like, wow, I am paying that much per month to watch TV, So it's just seeing things through this lens is really helpful to make sure that we're spending what we have to spend, but that we're being responsible. I do this with my kids all the time. I have 2 teenagers, one that likes to spend a lot more than the other. And the one that likes to spend, I need this, I need that. I said, is it really a need? Didn't we just get a new backpack? Do we really need another backpack? Or, you've been at Starbucks a couple of times this week, why are you going every day? So those types of things and just bringing it to light and having the conversation about it, hopefully will help us be more responsible. And again, maybe it's tweaks, right? We don't want to cut all the wants out because then what fun is life? So it's finding that balance and hoping that we can cut a little bit. And maybe what we cut and how we're able to change our financial position is more valuable to us in the long run than I really enjoyed that dinner out. Once you have the dinner out, it's done, right? But if you're building for a future, it could have more of an impact on your life. So one example I like to look at is Starbucks. And I don't mean to pick on Starbucks. I'm not a coffee drinker, actually. I'm a tea drinker. And so I don't go to Starbucks a lot, but wow, it is an obsession in this country, right? And let's say you go every day for your caramel macchiato. I don't even know if this price is accurate, but to keep it round numbers, I assumed it's $5. It's probably more than that. So if I'm doing that every day, 7 days a week, 4 weeks a month, then I'm spending about $150 each month or $1,800 annually on that. If I just make a tweak and I say I'm going to go once a week and otherwise I'm going to get it at home or I'm going to get it at my office where maybe the coffee is not as good, but I could save almost $1,600 each year, right? And so this is not rocket science, but are we really looking at it this way? Or are we just kind of doing it with our eyes closed and like robotic, like, oh, I got to make my morning stop at Starbucks and let me go get it, right? So the point is it adds up, right? And if we think about it that way and we look to adjust our budget, we can find opportunities to save that are not going to have a major impact in our life, but they will add up. Some other examples, I talked about reducing subscriptions, right? Like we had the Apple TV for free. When it ran out, I didn't get it again. One of my kids wanted to get his own Spotify subscription. I said, you guys got to go on the same one. So you got to share one, right? Eating more meals at home, looking for sales and discounts, right? If you really want that vacation, can you go at an off time? Can you find a time when you can get a discount or a rebate? And then again, purchasing on the credit cards is just a way to control. It's like, if I can't pay for this month and I can't pay this credit card off now, I'm not going to buy that purse because that tells me that I'm in over my head. So again, just a simple example, but it adds up. And we may feel like we have to spend on all these things, but I would challenge each and every one of us. Do we really need to purchase everything that we're purchasing, right? Once we understand what we're spending money on. All right, so the 50-30-20 budget rule. So there's debate about whether this is the right model of how to look at our money and where it goes, but I'm not going to debate it. I think it's good directionally for us to look at and understand where our money's going. So again, this is about monthly income allocation. If I have $3,000 net coming in a month to my bank account, what should happen to that $3,000? So as a general rule, 50% should go to the needs. So again, we talked about the needs and those fixed expenses. Sometimes they're variable. Housing, groceries, transportation, utilities, health insurance, car payments, right? Things that we need to live. We can't just cut them out. So even though we need housing, can we afford $5,000 a month rent, or do we need to find a place for 2,000, right? So if we find that we're spending, 70% on our needs based on what our income is, we probably need to adjust what we're getting in those needs, right? The next category is wants, 30%. So those wants, again, it's the fun, the travel, the entertainment, the restaurants, shopping, hobbies, 30%. So if we let ourselves spend 30%, and we think about how we want to spend it, then we're going to do the things that are most important, but we're going to keep ourselves within a limit, right? So we're not going to buy too much. And then finally, the 20% bucket, which is called savings here, but I want to make a really important distinction. It says emergency fund, it says debt payments, it says retirement and investing. The reason why this is important is that if we have debt outstanding and you look at what you're paying in terms of rates on those credit cards or those student loans, it can be astronomical. And it is much more important to pay off that debt before you invest in a 401k, right? Or before you set aside money in an emergency fund. Because if our debt is still outstanding and it keeps building and we're only paying the minimum amount each month on our credit card, it's just going to build and build and build. And things that we might have bought a $150 pair of shoes, and eventually we're going to pay $300 for it because of all the interest that accrues on top of it. So it's really important from a savings perspective to think about paying off that debt, especially the high interest debt, before we're investing for retirement. Does that make sense?
Yes.
Okay, great. So again, some people would tweak this and say it should be a little different. I like it because it's a simple way to keep our eyes on what's important and the different categories that we want to think about our money, right? And again, we probably don't think about this. It just happens. The month starts, the month's over, it happens. And all we know is we don't have the money in our checking account that we want. So, this is all about thinking about it, like hitting pause, taking a break, stepping back and analyzing what is happening and see what we want to adjust and being intentional about it. Okay, so to the question before about tools. So this is a template that I pulled down from the internet. And again, these are all over. If you search personal budget template, or home budgets, you'll see there's a ton of tools out there. This is not the exact one that I use. Mine's kind of busier and has a lot on it, but the concept is pretty simple, right? Again, this is a budget template to look at our net income, which is our financial activity over a period. Again, a lot of financial lingo, sounds like what I use at work, but very simply, it's our income less our expenses is our income or our loss, right? And so at the top of the spreadsheet on the right, you see the monthly income of $2,219, the monthly expenses of $1,912. The very simple math to subtract the expenses from the income tells me there's 307 left over, right? And that would be my income. That would be, wow, I'm in the green because I'm spending less than I'm earning, which is great because if I haven't already counted for that, I want some of that to go to savings, right? So the theory here is on the left side in the green, you're tracking all those income sources. So we talked about it in an earlier slide, but the salary, any investment income, any gifts, if you have rental income, what money do you have coming in? And then on the right, what money do you have going out? Again, I like the idea of breaking up the expenses into the fixed, the variable, and the periodic. I also like the idea of categorizing needs versus wants, right? So you can actually see how that money is getting spent. But the theory is that you would build this before the month starts. Right? Like, what do I think is coming in and what do I think is going out? And that would be your budget. And you could build it for the month, you could build it for the year. And then once the month is over, right, you carve out 2 hours and you go in and you update it with your actuals and you look at what the difference is, right? Where am I favorable, right? Where am I spending less than I thought or making more than I thought? And where am I unfavorable, right? Wow, I only thought I spend, 150 on cable and subscriptions, but when I add it all up, I'm spending 220, and it's like a shock, right? It's like, wow, I never thought about it that way. I never put it all in one place so I could understand just how much is going to my TV watching, right? And is it worth that? Do I think it's worth $220? Or should I call the cable company and downgrade? Or should I call the cable company and cancel? Or should I remove some of these subscriptions, right? And most importantly, what action are you going to take? What adjustments will you make in your life going forward in the future months to improve that net income? And just again, knowledge is power, and we're not always looking at this data. So just looking at it and being able to analyze and take a step back and really think about where our money is going will open your eyes in such a huge way. I mean, people are shocked when they see, what they're spending. And so you have to carve out some time. Whatever tool you use is fine. It's just a matter of really looking at it, breaking it down, understanding it, categorize. If you like working in Excel, you can categorize it the way you like to. If you want to do it on a piece of paper, you can do that too. You can, if you get your credit card statement in the mail, or you want to look at it online, you can look at your debit card, you can look at your bank account. It can be overwhelming because the data is in a lot of different places. And so it's not a perfect process, but the data is all there. And again, we're not looking for perfection. We're looking to get close. We're looking to understand the bulk of what's coming in and what's going out. And even what's coming in, you might not know, right? You may think you have that 50,000 annual salary to spend, but you've got to assume, 30% or some other amount is going to taxes right off the top. And so you certainly can't put that 50,000 in your budget. You've got less than that to start with. So you might not realize that. You might not always spend the time studying your pay stub and understanding, what is that net amount that I'm taking home? And that's a critical piece of the formula of the puzzle. And again, I think, while it's not on this sheet, I would like to see within expenses that we put a line item for savings, because we want to plan to save, right? So instead of this balance being 307, let's put that 307 into savings. And then our balance would be 0, right? And they do have investing of 300, which is good. So maybe we want 300 going into the retirement account, and we want 307 just going into a savings account because it's working towards one of our goals. Questions on this? I know it's a lot to think about and look at. Does that make sense to you guys? All right, we're going to move forward. I think this is the last slide, and then we can get to questions. So this template is, instead of looking at your financial activity, it's looking at your financial position. So it's your net worth. Again, it seems like a complicated financial term, but it's as simple as, what do I own and what do I owe? What I own are my assets. What I owe are my liabilities. And if I take my assets minus my liabilities, it tells me what my net worth or deficit is. So for example, if I fully paid off my house and it's worth 300,000, but I have 50,000 of credit card debt and car, financing, then I do 300,000 minus 50,000, and my net worth is 250,000. But it will be more complicated than that, right? Because you may have a savings account, you may have an investment account, you may have, on the liability side, student loans, you have a mortgage, you have an auto loan, and so on and so forth. But basically, if we take assets minus liabilities, it will tell us our net worth. Is it favorable? Is it positive? Or is it a deficit? And this is really important. You don't have to do this every month. I do this about 4 times a year, each quarter. And it's about understanding my trend. Is it improving, right? It might not, month to month, it may not improve, but is it improving over time, right? Am I paying down that mortgage? Or am I increasing my credit card debt, right? So what actions will you take to improve your net worth? Will you increase your assets, which would be, putting more into savings accounts, for example? Or will you decrease your liabilities, which is not charging as much on the credit cards? And this helps you understand just your overall position. Are you in a positive position? And if not, can you get there, right? Maybe in the next year, do you have a plan to try to get there? And it's tricky. There's a lot that changes here, right? If you have kids in college, if you're dealing with medical bills, if you've got, parents you have to take care of, there's a lot of things that can factor into this. So maybe 1 month you're going to be in a negative position, and that's okay. But what is your plan moving forward, right? We want to not get frustrated. We can't go back in time, right? All we can do is look forward. And we want to make, small incremental improvements so that we can build our confidence. So it's not about getting this to a wonderful position in 3 weeks. It's about what is our plan, and let me understand at least what my assets and my liabilities are so that I can plan going forward and try to get to a better situation. So that's our other statement. So again, just to recap, we had our net income, which is our financial activity over a period. And then we have our net worth, which is our financial position at a point in time. What is everything I own and what is everything that I owe? And then what does my net picture look like, or my net worth? Okay, so I'm done with the content that I wanted to cover with you guys. I'm going to go out of this mode so that I can come back and see you. Let me see if I can just remove this. Hold on, stop share. How about that? Okay, thanks for your patience as I try to find all the buttons. So I shared a lot of information. I'm gonna work with Loren to make the presentation available for you, and I think it's also being recorded, so you can look at it at your leisure if you want to afterwards. But I wanted to make sure we had some time, and I know everybody's busy, so I certainly won't hold you guys if we want to end early. But